I would like to confirm, am I audible?
Yes.
Yes. So, have you ever wondered that what if the tax rates on inputs are higher and the tax rates on outputs are lower? For example, the inputs that we are purchasing, we are paying tax at the rate 18%, and on the other hand, on the output, we are collecting 5%. So in that case, we always have an excess ITC sitting near electronic credit ledger. So what will happen to that balance? Will that amount be refunded? So that is question number one. So question number two, have you ever wondered that GST is a destination-based taxation, which means that the receiving state where the goods or services are used or utilized will enjoy the GST amount. So what will happen for a case where goods or services are used outside India? Yes, I'm talking about exports. So what will happen in exports? Whether GST is leviable or not? Or if GST is leviable, what will happen to that input tax credit and what will happen to that amount? Will that be refunded? So all these questions will be answered in today's presentation that I'm going to present. So I'm Tofik Tufail from Chennai, Tamil Nadu. Namaste, Sat Sri Akal, a very good evening, Jalandhar. So we are going to discuss refund of GST on exports and inverted duty structure. So before that, first we'll understand in what all the cases refund claim is possible. Situations that lead to refund claim, we'll see one by one. So the first one would be a supplies to developers and units in special economic zone. In India, special economic zone, even though it is in India, it is treated as a separate territory. So when we are supplying any goods to SEZ, it is treated as exports and there can be a refund claim. Second one, excess payment because of an error. Obviously, if we are paying some amount in excess in GST or 3P, for example, we have to pay 10,000 rupees, but instead of that, we have just put one extra zero and we paid 1 lakh rupees. So even that is the case, it is a genuine case of refund. So when excess payments are made because of an error, there can be a claim of GST refund. The next one, it's a pretty interesting one which I want to elaborate. If foreign tourists are coming into India and they are purchasing some goods that they want to use outside India. I'll just take an example. Suppose a couple is coming from Italy and they are purchasing say a TV set and they want to use that TV set in their country. So it is technically an export. But since they are purchasing in India, they cannot say that boss, it is an export, please don't charge GST, because the supplier, according to that place of supply provision, he will charge CGST or SGST. But uh, when they go to airport, there is a special department for them where they will just give their bills, and in that bill they can claim the GST which they have paid. So that's the reason whenever you go to airport and when you cross that international section, you will see duty-free shops. So GST departments has given certain power to that shops that they will not collect any GST and they will not pay any GST. They are duty-free because all the tourists will purchase all the things and that is not going to use in India. So currently this provision is not active, but there is such provision in GST. So that is one case of refund. So the next one is refund whenever there is any exports or deemed exports, which we are going to discuss in detail. And then accrued income tax credit on account of inverted duty structure, that again we will discuss in detail. So first we will go into export. What is an export? Supply of goods within a place of India to a place outside India is export. So as per GST, export is a zero rated supply, which means GST should not be leviable. But When they say that GST will not be leviable, government cannot have, the department cannot have track on such exports. So that is the reason department has given two options in case of export. Option number one is you can pay the IGST, and when you pay the IGST, you can claim the entire amount of IGST as a refund on a gross basis. I will just give you a numerical example. Suppose we have to pay an IGST of 100 rupees and we are having an ITC of 20 rupees, so the cash payable will be 80. When we pay the cash 80, we will get the entire refund of IGST 100 rupees as refund, which means the net tax payable is 0. So this is one option which is available for exporters. Now the second case is, they don't have to pay any IGST. So they have to get a letter of undertaking or bond. A letter of undertaking or bond, when they take a letter of undertaking or bond, they don't have to pay IGST. Instead, they can take the whole input tax credit. Like we will just extend that example. If they are using option number 2, they can take the 20 rupees ITC as refund. Now how they have to apply for LUT or bond? They can go into GST portal. There is a specific form called GST RFD 11 for LUT or bond. So under LUT or bond option, the whole unutilized ITC can be claimed as refund. Now let us discuss inverted duty structure. This is a very interesting thing, and it is a very rare cases are there for inverted duty structure. I will also give some practical examples for that. First, what is an inverted duty structure? An inverted duty structure is a tax structure where the tax rate on inputs are more than the outputs. Like as we discussed in the example, if the tax rate on input is 18%, but the output is 5%. So are there any items? Yes. In textile industry, inverted duty structure is there. Even in footwear industry and even incense sticks, all these items, this textiles, footwear, the output supply is 5%. But the job work, the service which we want to put are 18%. So which means that in our electronic credit ledger, there will always be accumulated credit balances. So there was a lot of discussion which are going into the trader, because this will always block their working capital. Because they cannot use their ITC because their output will always be less than the inputs. So that is the reason in GST they had a provision that if at all there is an imbalance in tax structure, which is called an inverted duty structure, the unutilized ITC which is sitting into the electronic credit ledger can be taken as refund. So that is the concept of inverted duty structure. Like currently, if I give some example with textile industries, even incense sticks is taxed at 5%, but the job work and the bamboo sticks which we are purchasing is at 18% tax. Now, if at all there is an inverted duty structure, in GST there are certain exceptions where even though there is an inverted duty structure, even though there is an imbalance in tax rate structure, we cannot claim a refund. So we'll just see one by one what are those. The first one is if the output supplies are nil rated or fully exempt. Now even one can argue that I am purchasing goods, or I am using the job work for which I am paying input tax, but my supply is exempt. So even this is an inverted duty structure because outward is 0% but inward is 18%. But it is specifically exempted. It is not an inverted duty structure because under ITC we have to use the rule 42 and proportionate ITC should be reversed. So in that case, ITC will not get refunded if the outward supplies are nil rated or exempted. The second one is if goods are exported outside India, but if they are subject to export duty. So if they are subject to export duty, and even though inverted duty structure is applicable, they are not eligible for a refund under this structure. The third one is if the supplier claims the refund of output tax paid under IGST. So if they use that option where they are taking the entire claim of IGST as refund, again they cannot take the refund of inverted duty structure. The next one is if the supplier awaits a duty drawback provision, then again inverted duty structure claiming is not possible. And one last exception is on notified goods. So department has notified certain goods where even though inverted duty structure is there, for example rail locomotives, so all these items, inverted duty structure is there, but it is specifically given these supplies that for that refund is not leviable. Now we will discuss certain procedural aspects. As auditor always say that paying to the government is easy, but getting a refund from the government is not a very easy task. So there are certain procedural aspects that we have to discuss of how to file a refund application. So a refund application is filed under GST RFD 1. So GST RFD 1 is basically an application for refund. And what is the time limit for filing GST RFD 1? So GST RFD 1 should be filed within 2 years from the date of export. Now let us discuss the frequency, whether we have to file every month or we have to file every year. So GST refund can be filed every month mandatorily, and GSTR 1 and 3 should also be filed in case we want to take refund under GST RFD 1. Now I would like to ask if there are any questions.
What are the documents to be attached with the refund application?
Okay, so the documents that are to be attached with the refund application is the export invoice and the customs clearance document. So if we are giving those documents, we can, like with RFD 1 we want to file, and we also need a CA certificate if the refund claim is more than 2 lakh rupees.
In case of inverted duty structure, can we claim refund on services?
Yes, it is input and input services, but we cannot claim on capital goods. Any other questions? Fine. So I would like to take this opportunity to thank Jalandhar branch NIRC for conducting this event and inviting me all the way from Chennai. And I would I want to also thank Kunal Kapoor sir and Manmohan Puri sir for patient listening, and all my fellow friends. So since I came to Punjab, so I learned little bit Punjab, so I want to end this session by telling 1 or 2 lines in Punjabi. So if at all I make some mistake, kindly apologize me. So ਤੁਹਾਡੇ ਸਭ ਮੈਨੂੰ पंजाब में बुलावे नाल बड़ा धन्यवाद। और किसी कभी चेन्नई आओ तो याद रखो ਤੁਹਾਡਾ ਭਰਾ ਉੱਥੇ ਹੀ ਹੈ।